It is a short update this week after a pretty quiet news week. We saw continued pressure from rising shelter costs, which is keeping inflation higher than we'd really like to see. But on another note, the savings rate hit a 16-year low, which basically is just another sign that consumers are starting to feel the pinch. And with that savings dwindling, we should expect to see a slowdown in spending soon. The rental market's cooling slightly, and we're starting to see rents dip a bit. And this trend could contribute to easing inflation in future reports. Those shelter numbers still have quite a bit of catching up to do. And then on the mortgage front, we saw applications tick up a bit this week, but they're still down 9% from last year. A lot of buyers are holding off, just waiting to see if interest rates do drop further with the Fed rate cuts, or if they'll be able to take advantage of the homebuyer assistance that's kind of been thrown around. Rates did improve slightly this week, but the big question's really how the labor market's going to influence the Fed's decisions. And speaking of that labor market, there is growing concern that the job numbers might be overstated due to certain workers not being fully counted. And this could be skewing the data we rely on. Reach out if you got questions there. Fed members are worried that their current policies might be too restrictive for an economy that really isn't overheating. And if the job market does show signs of weakening in the upcoming data, then it could lead to some relief in interest rates. So looking ahead, it is jobs week next week, and we're going to see the ADP and BLS numbers, which will be a major focus. And this data could influence, at least I should say significantly influence, what the Fed decides at their meeting in September, particularly if it points to a slowing economy. But that's your market update for the week. We'll keep you informed as these developments unfold, but have a great weekend.